Hello guys, so today we try to just get how my swing trading strategies work. So we try to just to see the general idea of how my strategies work. So we can go through and you can ask questions, and at least you get a general idea about how things work in my strategies. My strategies are different from any strategies that you see online or in books or in seminars. It's totally different because I use something that people don't use. Okay, so I will be just waiting for a few minutes. Here I don't see anyone who is watching right now. So, oh, hello Mr. Mash, how are you? Artkov, Wiseman, all the guys are here. So I'm just waiting for the other guys. So good night. How is everything for you tonight? As usual, we try to deal with this subject today, and I will let people ask questions and I answer directly, and this is a very good thing. So hope things are well, very well for you. So I see 3 watching, and 3 they say hi, so I say hi to them. Mr. Mash, Artkov, and Wiseman as always. And there are a lot of people I'm still waiting to come, and they have always questions, and it's very good idea to speak and share information. And as I told you before last week about the hurricane Irma that hits Florida and Virgin Islands, it goes to the north, but as I told you, they say category 1, and then there is no category 1, it's 0, because we didn't get nothing here. Like in North Carolina, there is nothing, there is no big deal. So as I told you, those analysts, those people who are forecasting the weather, it's the same as stock market. They see things in their mind, but in nature is different. So that's the good thing. So, but hopefully, what is good is for the business. Those retail businesses that they sell a lot because of these days where the forecasting saying that you will have trouble, so you buy water, you buy food, you buy gas, you buy whatever you want to buy, just buy. And this is this is how it works in stock market also. Okay, the analysts also, they say to you, okay, there is opportunity, buy, and sometimes they say to you, no, there is no opportunity, sell what you have. Okay, so this is just opinions, they say, but this is the bad thing. They don't tell their true opinion. They tell the opinion of those who pay them, and this is why it's bad. Hello, Empty Mind. How are you? So I have 4 people who joined the chat, and there are 2 who are hidden. I don't know who are they. They just watch. They don't want to make explicit, but it's okay. It's okay. Now, let's just stay like few minutes. I'm going to speak a little bit, and then we can go directly to our subject. Swing trading strategies. Now, before I begin, there are a lot of people, they don't know what is swing trading, and some who have taken my training levels, they told me, some of them, they have never heard about this term, which is swing trading. Now, other people in books or online, or they say, they just give a description, short-term trading. Okay, So it's the same, but understand that there are a lot of styles of trading, okay? A lot of styles in order to understand what is I am doing compared to the others. When you understand what is swing trading, and then you can, if you want to do swing trading, you understand what is it and why you should do it, and is it good for you, yes or no, because not everything is good for everybody, okay? Now the first thing I want to talk, just to make a distinction, okay? There are many styles of trading and investing, okay? So we begin with the first one. The first one is called scalping. Scalping is a day trading style, okay? It's just you enter for a few minutes, 1 minute or 2 or 3 or 4. These people, they do that when there is a big news, there is like a big move, okay, and they see it. So when they enter, they don't want to stay 1 hour or 2 and to finish the whole thing that is going on. So they want just to enter heavily, because when they buy a lot, okay, and they stay a few minutes, okay, and they exit. They make small trade, but small trade, they put a lot of money in it. So it's not you buy 100 shares of $1 and you say this is scalping. This is not scalping. Scalping is when you put, in order to get, because the cents, a stock, when it's going, for example, let's say it is $10, and it goes to, for example, to $10, 5 cents. Now 5 cents, okay, this is what you get. Now in order to make money, if you have only 100 or 200 shares, you will make no money, like $10 or $20, and you do buy and sell transactions, so the commissions will take your profit. So it's not what they do. What they do is they buy hundreds or thousands of shares, okay, depending on the account, and they just make small trades. Hello, Nas de la Noche, bonsoir. So they should buy a lot. Why they buy a lot? In order to make some money, okay? Because if you get 5 cents for a trade, okay, or 10 cents, this is little. So you should do buy a lot. If you have this 10 cents or 15 cents or 20 cents in just 2 minutes or 3, okay? And don't tell me, oh, the stocks doesn't move 5 cents or 10 cents in 1 minute or 2. No. I have seen stocks in the news, like earnings news. It goes to $8, $10, $15 in 1 minute or 2. So don't say that this type of trading is not making money. No, they make money. But those who are professional, those who have been very long and they follow the news, especially the news, in order to make such money, because it is something that doesn't happen each day, okay? People following, for example, earning news, earning data news, they follow company news. They are always with some kind of stocks and they follow them, but they have a very strong platform, okay, a day trading platform, because not all the brokers platform are equal. Understand that. In terms of execution, they use, for example, level 2 in day trading. It means where we have the bids and the ask. It means they are ahead of the game, okay? It means they know what they are doing and they are looking for something. When they get it, they just buy, wait for 1 minute or 2, they get some money and they exit. This is what we call scalping. Okay? So scalping is day trading. They don't hold for long. Now, and then we have day trading style, which is whatever in the day you buy, you wait half an hour, 1 hour, 2 hours, or the whole day, and then you sell. Sometimes, you know, sometimes when the whole market is going up that day, for example, you can check it. Some people, for example, they say they think that tomorrow will be good. In the morning, they just buy, going long. For example, let's say they buy in the morning at 9:30 or 9:35, and then they will just keep it until 2 hours or 3 hours, or until the day ends, if the stock is still giving money. Okay, that's it. Now, if the day begins bad, it means it's all red and there is something news or something, they short it and they wait until the end of the day and they make their money. This is called day trading style. Okay, and there are millions of Americans here, they do day trading, and all over the world they do day trading. So day trading is very, very famous. Okay, hello Vincent. So day trading, not just in stocks, but in forex, in options, and in futures, commodities. It means it's a big style. Okay, so this is what we call day trading. So day trading, we have two. We have scalping and normal day trading. It means you do all in the day. You don't hold stocks overnight. Okay, this is day trading. We have two. Now, if you do day trading, you are looking as a goal for fluctuations of the day, especially those that are related to news. That's why if you like news and you always like to hear news and you are quick in taking decisions, if you want to do day trading, this is what you should do, because it goes with your personality. Okay, this is day trading. There is a question from Nas Dilanocci. Say, how does earning date affect swing traders' positions? Okay, Nas Dilanocci, I will speak about that. I just entered. After I finish day trading, I go to swing trading, and I will speak about the news. Now, so the goal of day trader is to make money from the fluctuations of the day. Okay, fluctuations of the day. So he is not interested to stay overnight holding the stock, because there is a risk. And this risk, it could be earning dates if it is after the market close. Okay? So let's say he has a big position and let's say he wants to stay. But the problem is that he doesn't want to lose that much money, because earning date, okay, the news makes the traders, okay, buy a lot or sell short a lot. Okay, so there is a big deal of these earning dates. Okay. There is another question from Vincent. Have you broke any of your rules in training overnight? No. These are exceptions. It's not breaking the rules. No. In each rule, there is an exception. Okay? It's not breaking the rules, but it is an exception of the rule. You should know about it. I will be Vincent and Nas Dunanichi. You have the same question. I will answer you together when we have the earning dates. Okay, news. So let's say I am a swing trader. It means I hold stocks for many days, many weeks, or many months. This is swing trading. There is a risk, a big risk, when there is the earning dates for a stock. Some stocks, but not all the stocks. There are some stocks that they have earning dates for years, for decades, and there is nothing, because the traders are not interested in those, because they don't go like a gap up, a gap down. So they don't care about them. Okay, that's why a lot of people ask me why this stock all the stocks have earning dates, because they each 3 months, each 3 quarter, they should announce how well the company does in the earnings compared to last year. Okay, the analysts give the earning dates calculation, and the company will announce its calculation. If the analysts have said that the company will be doing, for example, $1 for each share earnings, it means each share you own, you have $1. If the company said, no, we have $2, so here you have a gap up, a lot of people, whenever they hear, they buy a lot. This is like an opportunity to buy from the news. Okay? Now, let's say the analysts say $1, but the company said, oh, we just got 50 cents. What does it mean? It means most of the time we have a gap down. People, they short this stock because of the bad news. Now, so the earning date affects swing traders in both ways, either making money or losing money. So you, if you are doing swing trade, are you with the risk, yes or no? Okay, because I will give you an example just to understand this. I bought a stock before, it's called ANAC, ANAC, and I have made a video on YouTube. I don't know, it's a long time ago, 1 year or 2 years ago. I think it's 1 year, it's like last year, 2016. I bought it $78. Next day, it goes to 135. Okay, I double my money. Do you understand what does it mean to double your money in 1 day? Just from the afternoon at 3 o'clock, in the morning, I see it 135. I sold it. Okay? This, I accept the risk and I get rewarded. But sometimes you accept the risk, and let's say you buy a stock, let's say 78, and tomorrow you find 60. So you lose a lot. So you should be with the risk, yes or no? This is about you, not about the stock market. Because no guarantee that this stock will have a gap up or gap down. So there is like a suspense. It's like in every trade you do, there is a suspense to make money or to lose money. So don't try to search for a sure thing. And this is a real problem for beginners. Beginners are always looking for sure things, and a sure thing doesn't exist in the market. Doesn't exist. How can you know? How can you know the company tomorrow it announces good or bad news? No one knows. Okay, so this is about Nas Djellala. I think I have explained and answered your question about the earning dates. So there is a risk. It's up to you. When you buy a stock, try to see the earning date. If you want to stay, you stay. But understand that if the stock is always going down, the probability that having a gap down is more. So you should understand that. If the stock is going up, the probability is maybe you have a gap up. This is just probabilities. So if you want to stay, Nas Djellala, if you want to stay, you should bear the risk and don't regret it. Either you lose or you make money. Okay. Now, second, Vincent said, have you broken any of your rules in training level 9? Exception to the rules, have you do any? Yes, I have done. I have done a lot. All what I explain are exceptions. Exceptions, it doesn't mean to break the rule. Okay? It's not to break the rule. If I tell you, for example, if you are thirsty, always drink water. Just an example, okay? You drink water when you are thirsty. For example, you are hiking and you have a bottle of water. You drink water. But I say to you, at the exception, okay, you can drink juice, for example. So drinking water or juice is not the same, but there is liquid, so it's very good for you. So it's just an exception to the rule. It doesn't mean that I break the rule. I don't break the rules. Okay, it is just something that it is extra. For example, I say to you, this will explain very well, Vincent. This is explained very well. I say to you, when you buy a stock, hold when you are right. For example, I buy a stock today, $10. Tomorrow it's $11. Okay, I begin to make money. Am I going to exit or to hold the stock? No, I am going to exit, to hold the stock for many days, many weeks, or many months until I got a lot of money. Now, what is the exception? If you have a gap up, let's say the stock is $10, tomorrow it is $17. Man, I make tons of money. Okay, 70% or 50%, it's a lot of money. So I don't want to lose all that profit because maybe the stock will be shorted later, next day or the other day. So what should I do? I sell my shares, and this is an exception to the rule. The rule is to hold more and more and more. But I told you this is the rule. But there are some exceptions where I sell when I got a lot of profits. Okay? So an exception, it is not breaking the rules. It is just you see what is good for you. Don't worry about the market. Worry about you. Okay? A gap up, I will make a lot of money. This ANAC that I spoke about, when I bought it at $78, it goes to $138. Believe me that this stock from 138 it goes down to now to 60 or 70, or I have never seen where it goes down. Okay, if I stay more and more, I will be losing my money that I have profit, a big profit. It's double my money. I will be losing my money, my profits. Okay, I shouldn't. For me, I shouldn't. For someone else, he said it's okay if I have a 100% profit. If I have 80 or 70, it's okay. But for me, no. I want to take all my money from the market and put it safely into my trading account. This is what I do. Now, for you, you can do something else. Okay? So this is the rule and its exception. So I am not really breaking rules, but I am doing exceptions. Okay? Exceptions to the rules. Okay, Vincent, I think I have answered your question. Artkov, he says, how do you know when a company has an earning date? Oh, Artkov, this is very simple. You just go and put earning dates calendar, and you will get Yahoo, or you get any other website, and you put the symbol of this company, and it will give you when, or it can give you a list, a very list each day. So earning dates are each day. You have hundreds of companies that have earning dates. So the earning dates are not in the specific time of the year. Each company has its own. For example, one is doing 2nd of February, the other 10th of February, the other is 12th, the other is 1st. So in each month you will have a lot of companies having their earning dates, because this is what they announce. They announce at this day, so they don't care about the other companies what they do. Okay, so this is very easy. Artkov, go to Google, put earning dates calendar. The calendar shows you whatever stock you are looking for, so it's very easy. Now, Vincent says, thank you for training. I picked 2 stocks earlier this week. Both went up 5 or 6 on Friday. It's very good. Just keep an eye on them. And as you have seen my training, don't go very quick and change your stop loss, because maybe you will get out. Hello, JJ. I haven't seen you. And there is another one, Ramius 78. How are you? See, Ramius 78. we don't put stocks into the chat room. So understand that. So don't ask him to put his stocks. You can contact him later by email and speak to him. It's not a big deal. But here, I am not going to leave anyone put stocks, or they say they go good or they go bad in the chat room. I will delete this comment. Okay. So please don't put names of stocks. Okay. So Ramius, thank you very much, because we are doing research each day. If you are one of my students, you just go to training level 2 or my subscription, and you will do the same as they do. It means you just search and select the best stocks, and they go good. If they don't go good, you have stop loss and you exit them and you make another one. Okay. So if you aren't new, you are new to my training, it's very easy, and it's something that we do all the year. Now, Vincent said, so if a stock that goes from $4 to $11 in one day, you sell all of it because it's a good... Oh, man, yeah. So what do you say from 4 to 11? Man, it's nearly 250%. If you have 50,000, it becomes 150,000. If you have 10,000, it becomes like 25,000. What are you waiting for? This is a big money, especially when in small stocks you will never lose. Okay. Now, I give you another technique that I use also. If you think that the stock can continue, okay, you think that, and you want to risk of your profits, because your profits go down. If the stock doesn't go up, it goes down, so it is eating your money, your profits. You can, for example, sell half of your shares and leave the others with a stop loss in the day of when you see the gap up. Okay, you sell half, and then at the end of the day you put stop loss where the price is. You put stop loss, and in the future, in the next few days, if the stock is still going up, you will be making money, okay, more money. And the other half that you sold is a profit, that it is safe, it is in your account. You can take this profit from your account, put it in your bank, and you want to buy a car, or you want to go to travel, or this is the money that we use. Okay, we are not accumulating wealth just because we do have to save money. That's it. No, we should use them. Okay, this is why we trade. We trade to make money, to live with this money, not just to save them the whole life and then you die and you leave all the money for other people. Okay, that could be stupid thing. But you know, everybody has his own choice. As I told you, Vincent, as I told you, from 4 to 11, it's a lot of money. It's about 270 or 80%. Okay, so it's a lot of money. For me, I told you, I have done another trade before, 300%. From 11.55, it goes to 29.50. 3 days only. Okay, so man, I just take my money and say bye to this stock. But this stock goes down because there is just a push. You know, it's earning date, or it's a good news company. Most of these stocks, someone asked me before, I just give you this information. Try to see where these companies have a good gap up or gap down, if you want to do that. But it is dangerous. Okay, it's dangerous. A stock can be 10, tomorrow you will find it 4 or 3 or 2. Okay, so understand that it is risky also. It's not just you play the thing. You should have a good strategy to just do that. But for me, I don't do that. I'm not looking for the earning dates of a stock, then I buy it. No, I don't do that. For me, I follow most of the stocks that are going up. They could have, as a probability, better gap ups than gap down. This is just probability. So be with the good, and you will be rewarded in the future. Okay, it might be going one day or two, you have bad gap down or something, but it's okay. It's okay. This is the risk that we do in swing trading. That's why we hold the stock. Now, day traders, they don't have this excitement of having gap up or gap down. But sometimes gap up or gap down in the day it happens. Okay, when the company announces, for example, at 10 o'clock, at 11 o'clock, 2 o'clock, they announce good things. I have seen one time a stock that the earning dates was like 3:45 or 3:55 or something like that. Just 5 minutes or 3 minutes before the market close. Believe it or not, I see this stock go around 8 to 10 points. Okay, it's just because of the news. So day traders at that time, they could make a lot of money if they are there and they heard the news and they see. But this is very, very fast. It is not for the lazy people. This is something you should have a good platform for day trading. It's not swing trading. Swing trading, you can take any platform and you can make money because you don't care about to be like precise. Okay, at the end of the day, you want to buy a stock. At the end of the day, what is the price you buy? So 5 cents or 10 cents more or less or more, it doesn't make any problem with a swing trader. But for a day trader, each cent counts because you are doing something quick and the day is very limited. Okay, but for us swing traders, we are not limited. We have the whole months, weeks, days, and we stay until we make our money. Okay, Vincent has another question. When you buy a stock name ABC, does the company ABC get any? Oh, no. Understand, Vincent, to understand this, I might your question, I might do a video. I might do a video and explain this, which is Vincent, I will take your question and I will make a video in the future and you can just see it. And okay, I will answer your question before, even if I will make a video for other people. The company have virtual shares when it is public, before when it is private, before it goes to public. The company is private because the people who make the company, it means the shareholders, you find them few people or few rich people or few people. Like for example, Facebook. Who has made Facebook? Facebook, Mark Zuckerberg with his friends. They put some money, okay, and they have percentage of the company. For example, let's say Mark Zuckerberg has let's say 35% of the company. Now his friend has 50%, another friend has 50%, and like this. And this is the private. But when it goes to public, they will have millions of virtual shares. Just virtual. It's just virtual. It has no value. But if I and you, it becomes public, I and you can buy it. So we give them money, real money, for a virtual thing that has no value. That's why the company Facebook becomes bigger and bigger and bigger, because the business is doing good, but because we help Facebook to become big. And that's why we have stock market. So stock market is we as public, we help companies grow. And if their stock grow, we make money from the fluctuation of the price. For example, Facebook, let's say Facebook, it was $45 in 2012. Now it is $170. Let's say you invest in Facebook. Okay. It means that you have made a lot of profits from this company price. But the company has already got its shares. They can, for example, if they need, they can sell some shares that they own, because they own a lot. Let's say a company, it can own 60% of shares they don't sell. It is not in the market. But if they want to, they can take some shares. When the stock is big, they can sell it. Okay? They can do bigger. For example, someone who has 10% or 15%, and then he has, for example, he wants all his money. He has billions of dollars. You know, those young guys, like, this is what I like in the young guys where they have ideas. These guys just in 2012, they were poor. It means they were just at college. They have nothing. With $1,800 they begin with, they make a small website, and this website becomes a monster, and it reaches all the world, like Facebook. So you see what I'm talking about is that we help the company to grow bigger and bigger and bigger. But the company, it has its own money when we bought the shares, when it becomes public. For example, Facebook, it begins with 42 the first day. It begins with 42, it goes to 45, and then at the end of the day it goes to 38, and then it becomes to go down. You ask me, how do you still remember? Yes, I still remember because I have traded that day. I bought it like at 42. It goes to 45, and then when it's going down, I just sold. Okay, but I see at the end of the day the stock was going down. Okay, so that's a day trade. Okay, so I think Vincent, I have answered your question about does the company get the money? It gets the money when it becomes public, and it is a lot of money because it is virtual. It means when you buy from the stock market, this share that Facebook gives you, it has no value. It's just a share of the company, but it has no value in real. Okay, and you say it is all a game. Yes, man, it is all a game. That's why people become rich, like Mark Zuckerberg, like Facebook. All the people who are owning a lot, like 10%, 20%, 30%, they become a millionaire in one day. Okay? Because they own the company. They have 60%, they own the company. So whenever they go public, they make a lot of money. Okay? This is how some people make money for real. Okay? Now, let's see another question from Wise Man. Won't we make less money than you at the end of the year if we sell half our shares after a big gap up? Won't we make less money than you at the end of the year if we sell half our shares after a big gap up? Oh, no. It depends what you do. But let's say you have a gap up. You have a lot of money at risk, because profits, you see them, but if you don't take them, they are profits, yes, but virtual profits. Okay? Let's say for me, I just wise men, try to listen. I will explain again what I've explained at the beginning. I bought a stock at $78. The stock is called ANAC, A-N-A-C. I bought it. The next day it goes to 135. I sold it. I didn't sell half. No, I just sold it, everything. Now, let's say if you sell half. The half that you sold is real money into your account. The other half is still virtual and it is profits. But let's say after 1 week or two, the stock is going down and down and down. Now, what do you think about this? You are losing that half of profits. You are losing some of it. Okay? So it depends on you what you want to do. If you don't want to sell, don't sell. But I'm telling you that profits are virtual. If you sold the shares, okay? If you sell the shares, the profits are in your hand because they are in your broker account. It's money. It's real money. But let's say you have a big profit and you stay many days and the profit will go down, down, down. It means you are losing a lot of profits. But for me, I am not telling you sell. I'm telling you if you want, you can sell, or you can sell half, or you can put a stop loss and you leave all your money, profits there, and then you put a stop loss. It says, for example, you say the stock I bought it at 78, today is $135. You put stop loss, for example, at 130. Just an example, okay? I say, okay, I will give this $5 to risk of my profit, but if the stock continues to go up, I will be making more and more money, which is very good. But the problem, if the stock is going up, going down and hits your stop loss, you lose this $5 from the profits. So it's all depend on you. There is no one solution for one problem. Okay? It's up to you what you want to do. For me, I'm giving you the best I do for myself. But you have to think about it. Okay? According to my strategies, you think about it and you take the decision that you want. Okay? It's not me who take decisions of your trades. You take decisions according to what I say to you. But you are free to do whatever you want. Okay? So there is Vincent question, for day trading, what kind of advantage of using level 2 versus someone who don't use? No, it is just some people use level 2. It's just to see the orders. But these orders sometimes are fake. It means they are fake. Sometimes you see big orders, you think that the stock will go up. Okay? You think that the stock will go up and the stock will go down. Now, for me, I have never used level 2 in my day trading, but I made money. I follow only the price. If the price is going up, I don't care about bids and asks, a lot of bids and asks. I don't care about that. Okay, what I care about is the price. I see what I bought. I see where I am. Am I making money after half an hour or 50 minutes or 1 hour? Am I making money? Yes, I stay. If I am losing money, I have my stop loss. I exit the trade. I make another trade. Okay. So it depends. It depends on what you want to use. Some people follow the news and they check the price. If they see the news, they are reading, it's good, and they see the price begin up, they just jump and buy, because this is very, very quick. It doesn't let you think. You should have a plan before. Your plan is done. It means you have made a plan of this stock, and then you are just waiting an opportunity to buy. So you can't just wait 1 minute or 2 or 3 until you think. Now, when you begin to think, the stock will be going so far away from where you want to buy. Okay, it's an opportunity doesn't come for that stock each day. It comes once. Okay, so if you don't find this opportunity, you should find another stock that has the other opportunity. Empty one, you say more volatile stocks, not for swing trading. It depends. If the stock is volatile and it's going up good and you make a lot of money, that's good also. Because some stocks, you see them having a very, very long trend and you see it's good, but when you see the money, you find, for example, a stock going from 50 to 58 in 6 months. Okay, in 6 months. Although the trend is good, but the money that you get, $800 for 100 shares you bought for 6 months, this is not a big deal. Okay, but some stocks, you find them 50. After 1 month or two, they go to 70, to 80, 100. These are volatile stocks that are good to buy. But the problem is how to handle, how to follow these stocks. This is the problem. So you should have experience, like what you do in training level 7. Okay, how to follow an uptrend, or my live trade that I am still in. You should know what to do at any moment, and you assess the information that you get from the market, from this stock, and you follow the stock accordingly. Okay? So as I told you before, we were speaking about day trading, and I told you there is a scalping and there is the normal day trading. You take any time frame, like you take 1 minute or 2 minutes or 5 minutes or 10 minutes or 15 minutes, the candlestick that you like. Okay, you choose what is good for you, not what is good for people. People or I or another one can't dictate to you what time frame you like. Let's say you like, for me before, I like 2 minutes and 5 minutes. This is what I like. I do the trade with those because it fits my personality. I don't like 1 minute because it will be boring. Okay, it will be boring because you will see each minute up and down, and it's bad. But from 2 minutes to 5 minutes or 3 minutes, when I see the chart, it gives me time to think what's going on into the stock. Okay? Sometimes I have 2 or 3 stocks. I put them into my screen, and I divide the screen into 3, and I see what's going on. I know where I bought. But this you do it when you know how to handle 2 stocks or 3 stocks at the same time, because it is just you buy, put stop loss, and then you follow. If the stock's going up, you will be making money. If it's going down, you will be losing money. So you exit the trade with a stop loss. So it's so easy. Just make a plan for the day, what you should do. Okay? Now, as I told you before, this is what we call day trading. We have 2 styles, scalping and the normal day trading, with whatever time frame, like 2 minutes, 5 minutes, 10 minutes, 15 minutes, half an hour, whatever you want. And then we have what we call swing trading. Swing trading is when you hold the stock overnight. This is the most important thing. You buy today and you hold overnight. This is called swing trading. It doesn't matter how many days or weeks or months you stay. It depends on the stock itself, and it depends on you. It depends on the stock if it continues to go up. Okay? And it depends on you. Sometimes you want to exit at any time. It depends on you. You are free to exit at any time. No one will stop you. Okay? But the bad thing, I have explained, I think, last week, is that some people think that there is a percentage. There is no percentage I use in swing trading. Oh, they say, oh, okay. Someone told me last week that one guru said if you get 10%, you exit the trade. This is stupid. I ask you the question: why you exit at 10 and the stock 10%, and the stock will go for 50%? Why I should leave this money to other traders? Why I shouldn't be in this trade until it finishes? It's just because this guru doesn't know how to follow the trend, doesn't know how to follow the stock, doesn't know when the stock stops giving money. He doesn't know, so he gives just an advice. Okay, just 10% or 15% or 2%, and just exit the trade. This is stupid, because if someone is saying this, it means he doesn't understand how stocks move. And if you are following like these guys, man, you will leave all the money to other traders and you will get just little. And this is not good. Vincent said, on Friday, North Korea fires another missile or and terrorist attack in London, yet the USA stock market went up. Does that mean the stock market is strong? No. It is just, you know, stock market is a game. Okay? It's a game. There are some stocks that go down, they get hit by sell-off and by short sellers, and there are some stocks that are going up. I understand you are looking for the general mood of the market, but for me, it is something. But for me, I don't look at those. I don't care. I don't care if the market is going good in America and you buy a stock and it goes down and you exit the trade. What do you think about that? Does the market going up is good for you? No, because you lost the trade. So it depends where you are in the market when we have the news. So you can't stop the news. Sometimes there are good news, sometimes there are bad news. So stop thinking about the whole market, because if you are thinking always about the whole market, what does it mean? It means you are following guys and they tell you what to do. Okay? Oh, there should be a collapse in the stock market tomorrow. Okay? If you are following these guys, you will never make money from the stock market. Stock market are for those who trade stocks, not the whole market. Okay? Let's say some huge mutual funds, they see the news and they want to sell off other day. They can. And you see the market is going down and you think it is about it's because of North Korea or because of something else. Okay? Or a terrorist attack in London. But see, it's just you are just wasting your time, because when the bad news comes and people short the stock, you were sleeping. Okay, you were sleeping. Let's say at because the market, it opens at 4 o'clock a.m. It doesn't open at 9:30. So the big guys who have they do big transactions at that time. Okay? They do big transactions, and this is not shown to the public. The only way to show is to go to your chart after 4 a.m. and to look for the prices of stocks at that time and the chart. There is a chart after the market close or before the market close. Okay? Some people, most of the people, they don't look at that, but sometimes there is a lot of volatility in that. So no one knows. So the thing is, what I want to tell you, Vincent, is stop worrying about the whole market. Stop worrying about the news, because when the news comes, if you put stop loss, you exit. That's it. What can you do? Can you stop this news? If there is bad news in the market, can you stop them? No. Now, if the market is going good in that day, can you stop it and stop it from going up? No. So you are just wasting your time looking at the international news. If you are a day trader, yes. This is what I say. If you are a day trader, yes, in the morning you should see the news in order to find opportunities to buy long or to short the stock. Yes, I'm telling you, if you are doing day trading, it's good for you. You follow this news and volume and price. You follow them because you can get better entries and you can make money from this news. But if you are a swing trader, we don't use the news. We don't use, for me, as I am concerned, for example, my live trade, it's going up, so I don't care about the market if it's going down or there is a news or North Korea have another missile or I don't care about that. Okay, If something go wrong in the market and the market go down, I exit my trade. I have my money, my profits. I don't care. They are safe in the broker. That's what I want. Okay, I don't care about if the market is bad or not. But if you know there is a news, you should watch them and watch the stocks that are you following on the whole market, and you can short the stocks in the morning, or you can go long if they are good news. Okay, this is good for you if you are doing day trading. I insist to say to you, day trading. Use the news, use volume, use anything, use the price, and trade accordingly. But if you are using swing trading, there is no, you just waste your time. Okay, I hope Vincent, you have understood this this thing. And there is in swing trading, it has another name. Some people, they call it short-term trading. Okay, they just call it like this. And some people, they give them the name swing trading because there is a swing. It means people, if they find a trend up, they follow it. If there is a trend down, they follow it, and this is what they do. Okay, this is what they do. Now there is another kind of trading. It is half investing, half trading. This is called position trading. Position trading is when you use technical analysis, support line, trend line, volume, news, and they use company information, which is fundamentals. They use both, but they stay 1 year, 2 years, 3 years, 4 years. This is called position trading. Warren Buffett, sometimes they do this kind of trading. Okay, it's trading and investing, but whenever he saw a high percentage of money in that stock, he will sell. And you can see his videos explaining when he bought Chinese companies and when he sold them. Okay, so it's just like a trading according to his size. Okay, and then he will just buy and sell, but he will stay many years. Okay, 1 year, 2 years, 3 years, 4 years, until he get enough profits if the stock is if the company is doing good, and then he exit, he sell everything, and then that's it. It's just like a trade with investing. Okay, this is what we call position trading. You take a position and you wait because you check that this company is doing good. The earnings are very good. There is growth. The company is making more stores. It's a new company. All the eyes are on it. Analysts then say it means there is a big deal of this company going on. It is excellent in competition. All the other companies are doing less than what it does. It makes more money. Maybe they give dividend and they add more dividend. They add more dividend. So this will be attractive to some people. And they see that the stock is not moving that much, so they buy it and they wait for many years. If they are right, they can make a lot of money. If the mutual funds buy it later, they can make a lot of money. This is called position trading. Okay, and then we have investing. Investing, I think you know. You should know the company. You should all the fundamentals that we speak about in the before. Good earnings, competition, there are more stores, good products that people like. It's like this. Debt ratio, balance sheet, all the stuff. Okay? And you should stay whatever you want. If a company is good and you are making money each year, so why you sell it? Because it's a big investment for you, so you stay. Okay, until you see that it's not doing as good as before, and then you can sell it. Empty Mind says, good chart is not found easily every day. Now, what do you mean by good chart? You mean the chart that we are using, it's not good? Or you are speaking about stocks? If you are speaking about stocks, you are wrong. You are wrong. You go each day and you find a lot of stocks and you select the best. Always there is, each day there is an opportunity to buy. If you do my search, you will find stocks. If you are doing something else, I don't know. So empty mind, try to see that. Andreas, hey, how are you? You come late today. It's why we have 1 hour speaking. You come late. Okay, that's good that you come to join us. So as I told you, these are what we call, what we speak about as trading and investing. Okay, all this we have spoken about. Okay, and it's very good that you should do what is good for you. Okay, each person knows himself. When you begin trading, if swing trading is good for you, you stay with it. If day trading is good for you, you stay with it. If it is position trading, you know about companies, you are good at finding good companies, and you search a lot, and you think that you have skill, it's very good also. Or you have very long investment, like for 10 years, 20 years, 30 years. This is your opinion. Okay? So this is the thing. Now, we have spoken 1 hour about the general trading and about trading, about position trading, about investing. Okay. What is a breakout? For Vincent asking the question, a breakout is when the stock goes out of the resistance line. Okay? So for my strategies, I will not tell you. If you know my strategies, it's very good because you will know. If someone has not ordered my training, I cannot go into details for this because it's part of training. And this is what we study in training level 2 and in training level 3 and in my subscription. All these speak about this breakout and how to take advantage of that. But not any breakout is a good stock. You find 200, but maybe 1 or 2 or 3 or 5 they are good, but all the others they are not good. So breakout is not, it's just a general term. It's like a gap up, like a breakout. It's not specific for something until you get the training. Okay? So, for me, there are many strategies that I use to make money. There is not only one strategy. There is going long. We have many strategies. Going long. We have 3 strategies, and there is shorting the whole sector or industry. There is another strategy when the market is going into a bear market, and you find a lot of industries, a lot of sectors going down. This is where we use shorting using ETFs. This I show in, I think, in training level 18. Okay. I am living in India, trading in Indian stock market. I cannot use your website for searching stocks. No, see. Empty mind. You are not going to use my search, but you know my criteria, and you can have stocks, and you put my criteria in every stock, and you will know if it is good or bad. So you can use that, but you don't use as a searching stocks. The problem is that you don't have a good stock screener, and I know that a lot of people, they complain. They say we don't find a stock screener like in America or Canada here. Okay, Here all the stock screen are free, and they have a lot of features. You can use whatever you want. But in some other countries, you should pay for this stock screener, which is bad in some other countries. But what I told you, empty mind, is that you can take my criteria, and let's say you go to your stock market. How many stocks are there in Indian markets? Like the number 200, 300, 500. You can check daily. At the end of the day, you can check some stocks, and you put my criteria, not the search criteria, but you can put my criteria that I use. I showed you in a diagram when I begin explaining what are my criteria. I explain how they work. So you can take this criteria and you put them on any stock, and you see if it is good or bad. This is how can you use my search stock. And you should search. Maybe you can find a stock screener that that has this criteria. I find one. I put it in my training, but it is not exact one. But I find one. Okay. Up to 3,000. Oh, 3,000 is big. 3,000 is big. So it's you need a stock screener, or you can empty mind. You can do training level 3. What do you do? You put the stocks that you always know that they are going up. You put them in a list, and then you apply my criteria, and then you find stocks. Each week you find 1 or 2, but this is manual. It takes you time to put these lists, but it's very good. Let's say before the market closes, let's say at 3 o'clock, the market closes at 4 o'clock. What you should do, you have a list of 20 or 30 stocks, and you put my criteria. If you can put the lines, and you put the criteria, and you just go one after the other. Whenever you find one which has my criteria, you can buy it. Okay, this is another solution. It's called the training level 3. How to search for stocks using an industry index. Okay, but you need a chart. You need a good chart. If you don't have a good chart, you don't have a screener, you will have always problems to find these stocks. When you have 3,000, it's a lot. Okay, you can't put these 3,000 into the chart. Okay, so try to do training level 3, how to search for stocks using industry index, following industries and following stocks. You can put a list, and whenever you find a good thing, you just do it. Okay, and if the stock goes up, you will be making money, whatever is the stock. Okay, so as I told you, my strategies, I have a lot of strategies. Going long, I have 3. Either you buy the stock from the support line. There are many support lines, so I will show it in my training. There is from resistance line, and these two you can buy when the trend is visible. Because here is the problem. We want to buy when the trend is not visible. You don't see the trend when you see the chart. The beginners, I have a lot of people sending me some stocks, and I see a big trend of 6 months, a trend, and then they like it and they want to enter. I told them, okay, you are late. You shouldn't do that. You should do from the beginning. You need my strategy to focus on. When you search, it should not be visible, because if a trend is visible, everybody knows about it, and when everybody knows about it, they come the day traders and become the short the stock, go long, short, and then the trend becomes bad. It's going down for a long time, then it goes up for a long time. So it will not be a good trend that we are following. We are following stocks that most of the time day traders, they don't know about them. They are just few day traders that know about them. That's why the volume is not so big. Okay, so when the trend is going up, it is smooth. There is no big going down, going up. No, you find that there is small corrections, but the trend is very good. And this is what we are looking for. You buy when the stock is hidden, when not a lot of people, because how the day traders they know about the stocks is because of volume. When the volume goes up too much, all the day traders they do stock screening, and they know these stocks, and they begin to short, they begin to go long. So that's why you see the chart is not good. That's why for me and for my students, all the people, we try to have smooth trends that you can make money a long time ago. It means you stay like the trade I am in 4 months and a half and 2 weeks. I'm still in the trade. If this was bad and it's going down and it's very known, I will be exiting the trade earlier, like in few days or 1 week or 2. But still, I am still in this trade. Only my students who know about this trade that I am in, and they are following me until I exit this trade. And this is a very good thing to know how to search for stocks and how to follow them. Now, so as I told you, there are many strategies. Okay. The most difficult is the support line strategies. Now, why? Because you should have experience to know what is a support line. You should understand how it works and how you enter, and then when you enter, when to exit if things goes wrong. All this is difficult. Because the stock, when it is going down, it stops many times, but you will never know what is the best support line. Okay, that's why this is what I do. I teach you the ways to see all this clear, and when you find an opportunity, don't wait. Okay, this is very important in what we do. For example, if I search for stocks today at 3 o'clock and the market closes at 4, do you think that I will stay until tomorrow and they say I will stay tomorrow and we'll see if the stock goes up? No. If you are doing this, what does it mean? It means you are not following the signal. You are following like a sure thing. You want a sure thing. And even if you buy tomorrow, first you lose this momentum. A stock is, for example, $10. You buy it today, $10. Tomorrow it can go to 11. So why you leave this from 10 to 11? It's $100 if you buy 100 shares. Okay? Now, who tells you that after today, tomorrow it goes up $1, it was 11, but the other day, the third day, it goes to 9? Okay? So it's not a sure thing. So stop thinking about a sure thing. Yes, Chris Clark, you are late. You are late. It's 1 hour 13 minutes, but it's okay if you come. It's very good that you come. Okay, always check your time, because we do this only once a week on Saturday at 11 p.m. Eastern time. That's what I do. The thing. Even if you are late, you can watch tomorrow when the video is processed. You can watch it tomorrow and you see what we have done. Now, Chris, if you have questions, just ask, because we are going to finish the I'm still continuing speaking about swing trading strategies, and then in the way we are having what you call we are having questions. You can ask questions at any time, no problem. Now, I said that the most strategy that it is difficult for beginners, it is from the support line. And this is what the beginners, they like. They like the difficult strategy. And I told them, okay, try to use the mid strategy, which is from resistance line. As I explained, it's easier. It's easier for you to do it. It's easier for you to make money. But going to strategy that from support line, it is for advanced students. Students who have been trading for 1 year or 2, they can go to this training level 13 and they can study it. Believe me, you should have stocks that you have in your portfolio and you should follow them. This is not you search and you find. No, this is not what I'm talking about from support line. This is not you search and you find them. No, it needs that you have these stocks for months, 1 month, 2 months, 6 months, 1 year, and you follow them. Whenever you find an opportunity to buy, you just buy and wait. And even the stop loss, you put only the initial stop loss, and then when the stock will be going up, you don't put stop loss near at all. So I will explain in training level 13 how to do it. Okay, so buying from support line or from the bottom, as they say, this is what the beginners like. And it's very good when you see a stock stops. Let's say a stock was 50, it goes to 30, it stops, and then from 30 it goes to 100. Okay, this is what the people like. But it's very hard. It's very hard for beginners to understand this. Okay, it's very hard. You need to have some experience. Now we have another easier that I teach, that all the people are following me. It's from resistance line. I will not tell you which resistance line or what or whatever criteria. This is all in my training. Training level 2, how to search for stocks using stock screener. And then there is another one, which a short term going long. Short term, it's 1 week. You trade a stock for 1 week, that's it. You can go more, but this is the thing is only 1 week. It is short swing trading. It has its own strategy, its own techniques. How do you find them? Okay, and I will show you how to find them. They are very easy, and you can make money, and you don't stay that long. You stay only 1 week, or less, or more. But the majority is only 1 week. Okay, and there is another strategy. Okay, it's going long, but when the trend has already begun and you want to enter, okay, this you can use training level 2 or training level 3, and it gives you the entrance. It means it shows you where to enter, but you are not going to make a lot of money because the trend is already big, so you are not going to make a lot of money from this. And there is shorting the whole market. When you see, let's say I give you an example. Do you remember, for example, for energy sector, when the whole stocks are going down for 1.5 years, that is the main thing you use shorting the whole market, the whole sector, the whole industries. You take any industry, you see the ETF, and then you short it. That's what but I will show you in the training how to do it. It's not just anything that goes down, you just short it. Okay, it's very difficult. And there is my strategy of selling short. This is for day trading. I give you techniques, I give you when, I give you the risks, I give you everything related to short selling. Especially if you want to do penny stocks, you should do them in the day. Don't do swing trading with shorting stocks. I'm telling you, I have told you, and those who took my training, they understand how risky is to short a stock and to hold the stock overnight. Okay? I will give you an example. Let's say you buy a stock at $1. You sell this stock short. Let's say, for example, the stock was $1.20, and then it goes one day it goes to $1. So you see, it's an opportunity to go and short it and to stay many days. But the problem, because there is manipulation in penny stocks, someone has a newsletter and he asks this stock to be bought. You find thousands of people coming and they buy this stock, and from $1 that you sell short, tomorrow you will find it $5. What will happen to you? What will happen to you is a catastrophe. That's why I'm always trying to be serious about risk. Catastrophe, what does it mean? You sell short the stock at $1, tomorrow is $5. What does it mean for you? You get a call, if you have a phone, if you put your phone, or you get an email in the morning from your broker, and he said that this is called a margin call, saying to you that you have lost 5 times your money. Let's say you put $10,000. How much you lost? You lost $50,000. You understand how problem you are in? You are not just losing money, your money. You are in debt of $40,000. You can go to jail for that, because you know the broker will ask for his money because you play with his money. You don't know how to trade. That's why, in order to stop you from playing like this, I say no selling short for swing traders. You are a beginner, you don't understand, and you can have a very real problem in your life. Okay? But in the day, if you do it in the day, let's say in the morning you sell short, but the stock is going up, you just cover it back. It means you buy it back, and then always you put stop loss in order to cover it back, and then you lose some money, yes, but you are not losing that much money because you do a good trade. Okay? So this is for selling short. Now, don't mix selling short with shorting the whole industry or the whole sector, because it doesn't work like this. It works with ETFs, and it's not selling short as the other one. It's different. That's why you should, for those who want a safer trading, you do shorting the sector or the industries is better than to do the stock, because most of the time a sector is very heavy. It doesn't go that much up, it doesn't go that much down, okay, except in volatile thing. You can lose money, but it is the same as a gap up or gap down. Okay? And avoid doing swing trading when selling short for penny stocks. Penny stocks are very, very dangerous. They are manipulated. There is a lot of manipulation, and you will have problems if you don't understand what you are doing. That's why for me, I want just always to speak about risk. It's more important to protect your money than to make profit, because the people they want to make profit, but they don't understand that there is a risk, and they should control this risk in order to make money. Now, if you don't know how to control risk, you can't make money for the long run. Okay? Because everything you do should have risk. I will tell you something very important. You go to the army, okay, and there is a war, let's say North Korea or Japan or whatever country is, and they send you there to fight. Okay? They give you a salary, let's say 1,500 or 2,000 or 3,000. But understand that the risk that you are doing, okay, is bigger than what you get. Okay, you are not getting millions of dollars to go fight for the country. So for those who loves patriotism and they like the country and they just want to do this because they like it, it's okay, because you understand the risk and it's okay for you, so you do it, no problem with that. But for people who want to live, to make some bucks, and he go to some country and then he comes mutilated, or he becomes a fool, or like some of our soldiers, they come from Vietnam before, or Iraq, or whatever country, they fight, and they come and then they don't find jobs. Some they are mutilated, others they become fool. It means they all their life is spoiled, and they have not gained anything. Okay, so it depends on you, and are you okay with the risk, yes or no? And you should be aware of what will happen. Don't say nothing happens to me. You are going to a war and you say, oh no, I will be coming, nothing happened to me. It's the war, you know, you can be killed, you can be mutilated, you can be handicapped, you can be becoming a fool, whatever is the thing. Okay, I have a question with Lou Tube. Do you think penny stocks are better for beginners? See, it's just because you don't have money you go to penny stocks. It's not because it's good or bad for you. You should know how to trade. When you know how to trade, you can trade penny stocks or big stocks or whatever stocks. So the problem is not penny stocks or normal stocks. Understand that penny stocks are volatile. It means they are risky in themselves. Okay? You can make money from them, but you can lose a lot of money if you don't know how to trade. So the best thing to do, YouTube, is if you want to do penny stocks, you have just little money, like $2,000, $5,000. You don't have that much money. You can take training level 2, how to search for stocks using StockScreener, okay? And you can search for stocks under $5, which are penny stocks, and then you can, here is my my website and my email, okay? And you can find stocks by price under $5, and you find them daily at 3 o'clock. It means you do the search at 3 o'clock before the market opens, before the market closes. Then you put them in the chart and you see them, and you find one or two that is good for you, and then you buy them. Okay, so if you want to do that, you just go to my website, check training level 2, either in videos or in ebooks, and you do that. Or if you want a better deal, you can do a subscription, and you have training level 1, 2, 3, 4, all this 4 training for free, and you can stay 1 month. If you want to stay more, it's just practice how to search for stocks, how to find better stocks. All this I do in the subscription. If it's good for you, you just buy it. Okay, you order this training, or you do subscribe, and if you have questions, just send me an email. I will be there always to help you. Okay, so as I told you, penny stocks, it is not better for beginners, but because beginners, they are obliged to do small stocks because they don't have money. But if you have money, you can go to $10, $20, $100, $200. Yes. Why you should go and trade $1, $2, or $3 stocks? Okay. So it depends on your money. If you have a lot of money, you do whatever you want. You need to be trained because it's very dangerous. If you don't know what you are doing, you will be losing a lot of money. Because here is the deal. You don't know why you buy the stock, you don't know how to follow it, you don't know where to put stop loss. All these are problems in the market. And my goal is to teach you how to be an independent trader. You don't rely on anyone, you trade on yourself. When you are trained, you do it by yourself. If you have problem and you don't understand something, at any moment, send me an email. I will explain whatever training, whatever problem you have, by email. Okay, so thank you very much, Lutu, for your question. And as I told you, there are many strategies that I use. Mostly the one I use a lot is trading from the resistance line, and this I explain in training level 2 or training level 3 or the subscription. Okay, this is what I do. Now as I told you, these are the strategies that I follow, and there are a lot of people they do the same, but their techniques are different from mine. For me, I don't use indicators except for a resistance line, support line. These are well known. I use them, but I don't use indicators that you know or that you see in the chart. There are more than 300 indicators. More than 300. If you have the chart with the indicators, there are some charts that give you more than 300 indicators. Indicators are small strategies that give you something. So if you don't know how it works, it will be very difficult to use it, because you don't know why you should apply this indicator. There are also what we call moving averages, okay, and there is volume, news, all these kind of things people use, and it's always used like this. Okay, so it depends on you. For my strategies, they are very simple. The chart is always clean. As you can see, my videos with the chart, they are always clean. Okay, clean, it means when you see them, you don't find a lot of stuff. Just you find the candlesticks, green and red, and you find lines, support line, resistance line, the trend line. Sometimes I don't use it that much. This is how I trade. It's very simple techniques, and this is how all my students are working and doing this stuff. Okay, so thank you very much for watching. Please, we are at the end of the session. We are at 1 hour 32 minutes. Please, if you have questions, all of you guys, I'm still waiting for you. If you have questions, you can ask. You can ask, and I will be happy to answer your questions. Okay. Before I forgot, for my live trade, for those who are following my live trade, I bought the trade in the 1st of May 2017. Now we are in the 16th. Today is Sunday. It is 17th. Today is the 17th of September. So we are 4 months and 17 days. I don't know next week what will happen, if the stock will continue to go up or go down. I have amassed a lot of money from this stock. Okay, and I just shared with you guys a real trade, and I make videos each week to show you why I do this, why I don't do this, what is my opinion about this, and all this information I give you is in training level 7, how to follow an uptrend. So I'm giving you the theory, I'm giving you the practice in real. It means the live trade I do are real things. Okay, they are real, and you can find my last video, which is the video number lesson 20. I just uploaded yesterday. You can watch it. We have a lot of information. And I'm still with the trade. Some people they send me emails. They say, "Oh, Karim, why you don't sell this stock? You have a lot of profits. Why you staying?" I say, "Why not?" Okay, if you are making more money, why you want to exit because you have profit? No, I don't care about this profit I have. I want to stay more to have more, because the stock is still giving you more and more money. Okay, so that's the good thing about the trade I'm doing. I have other trades, I prepare them, they take time. So whenever I'm ready, I will post another trade when I finish with this one on the subscription, because in the future I will put more on the subscription. I will not put any other trade in other training, okay, because subscription is the most thing. Thank you very much, Empty Mind. Yes, for me, since you are in India, there are a lot of Indians that are my students and they are following me. But if you find, for example, an Indian stock screener, you find it which is free, you just let me know, because I will give this information to the other people. Because here, each country is different, okay? And if they don't find a stock screener that are good for them, although they don't find stock screener, but my training has nothing just to do with the stock screener. You can take my criteria and put them in any stock, okay? But the search, you need stock screener. There is another way, Empty Mind. You can put a list of stocks. You can go to training level 2, how to search for stocks using stock screener. If you want videos, or if you want ebooks, and you can go there and you make a list of the stocks that you like, that are very strong in India, and they are always going good each year. So you put all these and you apply my strategy, okay? If you apply my strategy and the stock continues to go up, you will be making money, okay, in every stock market. Because my strategies are based on price. It's not based on fundamental, or you look at the company. No, it's just on the company itself. So it's very good. But understand, Empty Mind, that I can't give my training here live for free. So almost all the people, they go check my training, and they can study, and if they have problem, they ask me questions. I always do, okay? I have followers and students from all over the world: India, Singapore, it means Asia in general, Middle East. I have in Australia, in Europe, in South America, wherever you go, I find some who are following me in my YouTube channel. And most of them, they have ordered my training and they are working with it, okay, according to what I know. And some, they are struggling to find stock screener that has my criteria, and sometimes it's difficult. Sometimes in Australia, they told me you should pay for the stock screener, which is too bad to pay for stock screener. Here in America and Canada, all the stock screeners are free. It means you just go and you put, and there are a lot of features. It's just for free. But we are lucky here in America that we don't pay for stock screeners. But other countries, they pay. Even the charts that we are using in Canada and USA, the freestockcharts.com, it's just free, and it's one of the nicest. And this is what I use in my real trading. I make the plan and I do that. But other countries in the world, they don't have the same good chart that we have, and maybe they should pay to see the chart, which is too bad. They have disadvantages. That's why some people from other countries, they come to America. It means they have an account in America in order to get all these benefits. Some they do, if they have some money. But if they don't have most, I don't know if someone wants to do it, if he has a little money, like 1,000 or 2,000, 5,000, he should see American brokers, and he can apply for an account, and he can trade from USA, and he can use all my strategies with stock screener, with everything. This is an option for those people who can do that. Some people, they have little money, they can't, so they stay with their stock market. Okay, so thank you very much for watching. Please, if you have more questions, you can ask here. For those who have come late, you can watch this session live tomorrow when it is uploaded, and that's a good thing. And it's very good to talk to you guys. And then even if you forgot to ask me questions, you can send me a private message as always, and I will always be here to answer your questions. Thank you, Nasdinonochi. Thank you very much. I am Nasdinonochi. I am always available 24 hours a day. It means whenever you send me an email, if I am on the computer, I will answer your question. If you have a training that you are studying and you have problem, you don't understand, just send me an email without waiting, because I can't talk about my training here in the live session. So you can ask me questions and I will answer them. Thank you, Ricochet, Ninsisti, and Wiseman. Thank you, and good night for everybody. I know some people that maybe today, which is Sunday, they go to work early or something. Sorry for that. And some people who are just having day off, it's very good for you to just do whatever you like. And thank you very much for watching. And then in the future, if you have questions, just ask me. And we will see you together next week if God wills. I have some good news about my subscription. I will be lowering the price maybe next week for those who already bought some of my training levels. I will give you details in a video, and it will be very good that some people who can't afford the price right now, it will be going down if you have taken my some of my training. I will give you details about that, but it is not now. I'm just thinking about this because a lot of people, they ask me if you can lower the subscription. They can subscribe for 1 year or 2, and that's a very good thing for me. The only thing I'm thinking about is just to be independent. When you know the training, you can take the subscription just to practice for 1 month or 2 or 3, and then when you are good at practicing and you see my live trade, which is excellent, and then you can just stop the subscription, because subscription is just for practicing. It's not I will send you stocks to buy. No, this is not stock picks thing. Okay, so this is just a practice thing about my subscription. Okay, so thank you very much for watching, and see you next week if God wills. If I want to send you good news or news, it always should be in the video. If you are in my if you have already ordered what you call my training, I will send you an email as usual. Each week I send you 1 week one email or 2. Okay, thank you very much, and see you next week. Thank you.